Okay, and welcome to Currencies Direct weekly podcast for Monday, the 27th of September. The Rand is on the ropes. Having closed last week more than 2% weaker, the local unit is not having a great start to the last week of September, having already shed more than 1% against the majors this morning. Weakness for the Rand started last Wednesday, as the US held the monetary policy meeting. Fed Chair Jerome Powell sent investors in search of the mighty USD once again, as he announced the central bank could begin scaling back asset purchases soon and complete the process by mid-2022. Powell went on further stating that while interest rates will be kept low for now, the US central bank's first steps towards withdrawing emergency pandemic support for the economy could come as soon as the next meeting in November. It was one central bank after the other, as SARB Governor Kganyago then took to the podium on Thursday afternoon. Kganyago announced that the repo rate would remain unchanged at 3.5%. However, it is what he mentioned after which caught the attention of many. Kganyago suggested that the MPC would undertake a more hawkish approach over the short to medium term. Despite Kganyago indicating at interest rate hikes, news did little to aid the Rand, as with any hints at turning more hawkish either already priced in or counterbalanced by risks to the SA economic outlook. Elsewhere, another crisis is beginning to unfold, and this time it is not COVID-19 related. Electricity and energy shortages in parts of the Northern Hemisphere has investors in search of safe havens. Both the UK and parts of Europe are facing electricity shortages due to a shortage of liquid natural gas. Interestingly, there is also a power crisis in China, which is limiting industrial production and is even starting to impact supply to households, a matter all too familiar for the Rainbow Nation. In addition, the supply of LNG has also extended to oil, with the price of Brent crude nearing $80 per barrel. The UK is also facing petrol shortages due to a lack of truck drivers, which appears to be a continued fallout from Brexit. Over in China, markets are down this morning after Chinese real estate group Evergrande missed an interest rate payment last week. That's it for this week's edition. If you'd like to chat about any of your currency requirements, please get in touch with us on 021 418 0105 for Currencies Direct weekly podcast. My name is Justin Ludovic.